Welcome back to the Video CPA. I'm Michael Scott. I am the Video CPA, and I'm your host for this channel, where we talk about matters of taxation, U.S. taxation for U.S. taxpayers. So today we're going to talk about choosing the right filing status. And filing status, generally a pretty easy decision, but sometimes it can get really complicated. So we're going to talk some about the nuances. We can't go into a lot of detail on this short video, but we will mention a few things that you may not be aware of. So we have our disclaimer first and our educational disclaimer. And so let's get into it. What filing status should you choose? And the basic answer is choose the best one. Well, choose the one that you qualify for first. You've got to be able to qualify for the filing status that you're choosing. But also then choose the one that is going to give you the biggest tax return, the biggest tax refund, or at least you'll owe the least tax if you don't get a refund. So filing status is determined generally on December 31st of the tax year that you're filing your tax return for. And so you need to look at whether you're married on that date or not. And whether you're married will determine whether you're filing jointly, a joint return married or a separate return married, or you're going to file one of the returns for a single individual. So let's look at the various filing statuses. First, we have single for taxpayers that are not married or legally separated. Married filing jointly, probably single and married filing jointly are the biggest two filing statuses that we have. Of course, married filing jointly is for married taxpayers, and they have to be married on the last day of the year. If they're married 360 days during the year, but not on the last day of the year, they're not eligible to be married filing separately. On the other hand, if they don't get married until December 30th, they're married for the entire year. So that's the way it works. Okay. Now, also, if your spouse dies during the year, if a married couple's spouse dies during the year, that surviving spouse can actually file a joint return in the year of death of their spouse. So those are the two options. You're either married and you have a living spouse, or your spouse dies during the year and you can file married filing jointly for that 1 year. All right, married filing separately, I don't advise it, but sometimes people do not want to file with their married partner for some reason or another. And so they choose to file married and separately. It's not the best tax situation for them, but sometimes it's the best legal situation for them. So head of household. We'll talk about head of household. Single taxpayer maintains a home for a qualifying person for over half the year. And then you've got your qualifying widower or widow with dependent children. And they can file married and filing jointly for the year that their spouse dies. And then for the next 2 years, they can actually use this status, qualifying widower with dependent child. And this status is close to married filing jointly. All right. So single status. Let's talk about it a little bit more. For individuals that are unmarried on the last day of the year and don't have a qualifying person for which they provide support. All right. And we mentioned earlier, if your spouse dies and you're single on the last day of the year because your spouse passed away, you can use a married filing jointly status. But other than that, if you have no qualifying individuals in your home, you're going to be filing single status if you're unmarried. Married filing jointly, like I say, a very common filing status for married individuals. You've got to be married on the last day of the year, like we talked about. Again, if the spouse dies, you can file a married filing joint return. Both spouses in this case need to agree to file this joint return. If not, they're going to have to file separately. But there are some drawbacks to married filing jointly. I mean, you are both jointly liable for the tax. That means even if the one spouse did not make any money and the other spouse made all the money, um, the spouse that didn't make any money is jointly liable for the tax that he or her other spouse made, the tax on that money. So there is some legal obligations here that you need to be aware of. Now, there are some remedies to that as well. I mean, there's innocent spouse relief, and I've filed those things before in situations where you had a total crook. You know, in this case, the husband was a total crook, but those are pretty hard to get, and so you need to, you got to do a little bit more work there, and it costs the taxpayer money. So, even if you file a joint return, even if you're divorced later and the IRS comes back and says, okay, we're auditing these particular years, if you filed a joint return in those years, even though you're divorced, you're still liable for the tax in those years, okay? So you need to be very careful who you marry and who you file joint returns with, because it can get you into some sticky type situations. All right, married filing separately, I don't advise this ever unless your spouse is a complete crook maybe, or totally irresponsible, something like that, and you just don't want to be responsible for their half of their money. But you need to be aware that you are giving them quite a few benefits when you file married and separate. And again, if a married individual decides to file separately and they've got a qualifying individual that they may have maintained a home for over half the year, they might be able to file head of household. So that's a possibility. So let's talk about head of household. Head of household is a situation where it's a single individual and they are maintaining a home for more than half the year for themselves and for another qualified individual. Now, when you get into qualified individual, there's a lot of things about that you need to know. I'm not going to go into that in this video. I did make a video, just a standalone video on head of household. I've got the link to that down below on the bottom of this slide. So if you need more on head of household, hopefully that video will explain more. But the IRS is looking at head of household a lot more now. Tax preparers have got to do due diligence to make sure that their clients are really qualified for head of household, and so a lot more scrutiny on head of household because a lot of people have been taking advantage of that filing status. So just be aware of that, and these people will have had to live with you for over half the year unless they're a qualified, unless they're a parent. Okay, if the qualifying person is a dependent parent, well then they don't have to live in the same home as you do in order to take head of household. All right. So if you need more information, look at the other video. It's out there on the YouTube channel as well. Now, qualifying widow or widower with a dependent child, we talked about that a little bit. Situation where your spouse has passed away, so during that year you can file a joint return. Then during the next 2 years you can file this filing status, qualifying widow or widower with a dependent child if you qualify. After the 2-year period, then you can file head of household if you qualify for head of household. So pretty good break. It can be a child or a stepchild. It cannot be a foster child or anything like that, but it's got to be a qualifying person, and they have to have lived in the home actually the entire year except for temporary absences, which is away at school or something like that. And like I say, unless it's a qualifying parent and a dependent parent, and then they don't have to have lived in the home. All right, that's it. I went over that very fast. If you got any questions, put them in the comments area, and I'll be glad to respond to them. And I want to thank you for tuning in and listening. And as always, if you haven't subscribed, please subscribe to the channel. Thank you again.